Hello, everybody, and welcome to this evening's SheFan Pro's Empowered Women in Blockchains. I'm absolutely delighted to have you all here watching back on the recording with myself and Joanne and our fabulous guest speaker, and also one of our very, very important partners within our ecosystem here at SheFan Pro, the wonderful Paul F Dowding. Now, Paul is actually the co-founder and head of design for L4S Corporation, which is an amazing place. It's an amazing place to be. It's an amazing place. I love it. It's so interesting, the technology and everything about it. And I can't wait for you all to hear exactly what Paul has to share with you, because I could just listen to him all day long. Honestly, I could. So Paul, welcome. Thank you for being here with us today. I know how busy you are.
No, thank you for giving me the time. I appreciate it. I'm happy to help.
Yeah, so to start off, I guess, because I'm just raring to go. I'm so excited to hear everything that you've got to share with us today and our audience. So you could give me a little bit of a background, really, and introduce yourself. Please feel free.
Okay. Well, I started life as a manufacturing engineer for Ford in the UK. But after a few years, I transitioned into what was called banking operations. So these are the processing engines. Most people know, banking in terms of the services that we all know as customers, or they hear about Wall Street and trading. But all those transactions have to be settled and accounted for. And so in the big institutional banks, where you've got large investment funds and everything else investing internationally, there's a lot of infrastructure. And my career has been working with different banks and brokers, fund managers, and even the clearing houses over the past 30 odd years. So I've been involved in the infrastructure of that industry and trying to make it better, more accurate, more efficient, and more, improve the quality ultimately for the underlying clients who are either investing their money or banking their money.
Okay, that's amazing. So I guess the burning question is, how did you become involved in blockchain? Where did that start?
Partly accidental, and partly because, as my wife says, the planets kind of aligned. As I said, I was involved in the infrastructure of the industry, and you obviously want to make things work more securely, quicker, and more uniformly. A problem in the industry is that literally any time, and most people aren't involved with so much investments at the institutional level, but if you invest in a fund, they could invest in multiple securities. Well, each of those securities, whether it's a share in a company or a bond, or an option or a future, some of the derivatives, they all have their own clearing infrastructure. So everyone needs a different settlement. So I was trying to help make those things more uniform, more faster. And suddenly I was looking at getting things settling on the same day inside a big institution. And they get these applications. Well, there's these guys promoting blockchain. And this is around 2014. And I couldn't understand it. I didn't really understand Bitcoin at the time. But as I said, my wife said the planets aligned. In my career, I've worked for big banks and brokers. I've also consulted independently. But as an engineer, I had a lay interest in meta mathematics and number theory. And I have read some of the papers by Turing and Gödel. These are famous mathematicians. Turing people usually know because of the compute, encryption game. But through that, I looked into uncertainty, and I had to relearn what they call set theory. So I had this interest in numbers. My dad was involved with encryption with radios. So again, when they invented asymmetric encryption, which is key to one of the things, I'm not an expert, but I knew fundamentally how it worked, or what were the entry points to it. So when someone starts giving me white papers around blockchain, they tend to be written in set theory. The first two chapters are on encryption or hash linking. Hashing, what is hashing? Well, it's a very high form of modular math. And so I wasn't necessarily intimidated by it. I actually got to the good bits of why does Bitcoin work and how it works. So that kind of aligned for me. And then I was looking at it from a perspective of a process engineer as opposed to a technologist or a data scientist. And so at that inconvenient time, I left the big institutional bank. I joined a boutique consultancy, and they said, "Do you know anything about blockchain?" And I said, "Well, I kind of like I've scratched the surface." But they said, "Well, we're getting inquiries. Can you help us? You know, is there any opportunities for getting consulting engagements?" And that led to me doing my initial research. And suddenly I walked out, I wrote an internal white paper, and I said, okay, I now understand Bitcoin. I understand why it works, how it works, why everyone's excited about it, particularly this blockchain thing, this ledger, this distributed ledger. And I said, look, this is going to revolutionize the world. I said, however, I'm looking at it from a process engineering and control perspective, and I'm saying kind of, you know, you need to customize it for every use case. It has performance issues. It can't scale. It can't handle a lot of volume. It's not very quick. It kind of lacks some functionality. You know, doesn't have accounting within the ledger. You can't do future dated transactions, you know, as recorded as payable receivables. And then they tend to be walled gardens. You know, you're in one network and that's it. So it can't interoperate with legacy infrastructure. And what I ended up doing was laying out 10 challenges. And I was like, this is great, guys, because this technology is the future, but they need to solve for these problems. The problem is there was a lot of Hyperledger, R3 Corda, digital assets, Ethereum was all taking off in 2015. But they all, and you can read their white papers, they say this is it, this is how we work, but we have trouble with scale, we're not very high capacity, and we can't interoperate. And they actually admit these things in their white papers. So we thought people would, you know, be coming to us to say, hey, can you help us solve for these problems? And but although they had these issues, they still kind of work. So that's where, particularly in the crypto world, they were sufficient to process, you know, crypto asset transactions, which ultimately became DeFi, NFTs, and now we're talking about the metaverse. But in the regulated world, there's been proof of concepts or specialized use cases, but very limited implementations, if any, of scale that are profitable in the regulated or institutional world. And that's what we sort of found out, you know, six years ago. What it led to was when everyone was distracted by the open source solutions that were there, I sort of sat myself, you know, I joke about setting myself in a dark room, but I was like, well, how would I solve for this? Because this is my career, process engineering and everything else. And came up with a very different design. The interesting thing was, we made it try to generic at the front, so it's agnostic, so you can have any transactional life cycle. And we were gearing for the capital markets and, you know, high frequency trading and algorithmic executions and things, because that was the world we lived in. So I needed the performance, I needed the scalability and the accounting, and to do future dated payable receivables. And so I came up with this very different design, and one of our investor advisors, who was in the consultancy, said, you've got something here, we should patent this. So our patent is still pending because the patent processes can go in different series of leaps and bounds. But we did that, and then after a while it was decided, you know, we should form a venture to promote this. So and what ended up happening is by me doing this research and knowledge, then people said, oh, you're the blockchain guy, can we talk to you? So by definition, I had to keep up with all the latest developments. And so that's a sort of bit of a long story, but that's what it led to, and you know why we're doing what we're doing today.
That's amazing. What a story. And, you know, it's so inspirational as well, you know, that you know, the path that you've been on so far and everything. So could you tell me, moving on to Tapestry X, and, you know, and you know, tell me more about that and our audience as well, please. And what was the genesis for that?
Yeah, so part of it, I just said, came out of these challenges, and then they became really design requirements. I can give a couple of simple examples. One of them was, if you look at a blockchain, it's really a series of time-stamped transfers of ownership. You know, if you were paid Bitcoin 3 years ago, the only record of it is that block that's 3 years old. So if you now want to pay someone that Bitcoin, apart from it still being a fairly significant amount of money right now, but you'd have made a lot of profit by that point. The person would have to check the ledger from 3 years ago, see it's your key and it's your Bitcoin, but then they have to check the entire ledger from then until now to make sure you haven't spent it since. Then they'll accept your transfer, and still it has to go through the mining process to be accepted into the ledger. The problem with that is that you need to keep the entire ledger in active memory, because you don't know where your transactions are going to go from. So this is what I defined as the memory scalability issue, because Bitcoin's volumes and Ethereum's volumes are such that there's a fair large amount of memory if you look at the entire ledger, but it's still relatively manageable. But there's like 9 million trades a day on the New York Stock Exchange. And if you had to record each one and keep it in active memory just in case, you'd run out. So, you know, one of the ideas which I couldn't patent was to say, oh, I know what we do. We have a starting balance, a transaction, and an ending balance. Then you archive the transactions and carry forward the balances. You've still got a continuous record because everything's still linked. But your active memory is what's the active balances and plus any future dated transactions. Now, remember, we have transacting periods now, which I think of a blockchain really doesn't. It's a continuous sequence. Because we have transacting periods, we can archive the old ones and we can post future dated transactions. But that's with the payable receivables. That's with double entry accounting. So we have that in a immutable record. So those are two things that the memory scalability, which we solved, which could be done with today's processing. The problem is that the current blockchains, to transform themselves from the sort of Bitcoin model to a banking and a statement model is too much of a hurdle to climb without them really scrapping all they've got, whereas we put it in from day one. So that solving for those problems, I can't tell you our secret sauce, but what we found was a way that, if you think about it, you can go to Bitcoin or Ethereum or any other protocol, you can download the history. You don't have to send it back to some miner or people to vote on it. You can validate the whole history on your own. It's just a net set of transactions that need that consensus or mining or some selected leader to validate it. Well, we found a way to give the current transactions the same property as the history. So they synchronize and validate on their own. It sounds counterintuitive to a lot of blockchain people, but usually when we explain it to people, they get excited about what they see. But what it means is the synchronization is happening automatically away from the user. They're just doing what they do today, load their transactions and read their accounting. So from a usability perspective, it's obviously A, real time, and then B, just the same as what they do today. The nodes that are running the synchronization are just running in the background, but that can all be validated and checked in real time. So that's going through each of the challenges, which were formerly, performance, functionality, and ease of adoption. Once we got those things right, then we felt we had something. Having said that, I've spent 5 years explaining it and people believe it, but they want to see, like when we had slideware, it was like, this is great, but come back when you've got working software. So we spent a year building a demo system, which proved the concept of the design. And then everyone was like, okay, you've proved us that it works. Come back when you've got working software. So and I can appeal to any entrepreneur and anybody who's funding their blockchain projects right now. You know that you go through this series of cycles where you think you're going to hit, pay dirt at this point, and you need some more funding just to get you to the next stage. So the year before we built the demos, last year we built the production system that was ready in March. And obviously we'd garnered interest from different companies and interested clients at that point. And we're at the point of active negotiations on legal agreements to launch our first proof of concepts or live. And it's a combination of publicly listed companies, large companies, and startups that we're trying to attract. But interestingly enough, we are, we're at the point where, because we made it agnostic to the financial services, we found, well, guess what? In a supply chain, a factory part or an inventory item or a food item in a supply chain is an asset. Records management, even things like voting, they're just assets and transactions that need to be recorded on distributed ledgers. So we found some interest from a lot of different use cases. One of our board members is now from the distribution industry, so we can meet that. I can claim to be a manufacturing engineer, but that was years ago. But so I have some idea of what it is to move real metal parts through factories and stuff. But so that's opening up some interesting doors for us, so we're now at the hopeful point of takeoff. But just got a few more agreements to sign, a bit more funding to raise, and then we'll be off to the races. But I think the point I'd like to emphasize is like, it's one thing to have the creative idea. It's a big hurdle to get this thing to fruition, to adoption. And you have to fight there's the general naysayers about blockchain in general. Then there's the people who are defensive about their solution versus yours, and then even convincing. The big companies are great as clients because they've got usually big budgets. They just take a long time to work out they're going to spend them. The small companies are great because they move quick, but they're usually in the same funding challenges that you have. So it's like, how can we make them work together? So hopefully what I'm saying is resonating with a few people out there.
Yeah, I'm sure it will be. And it's incredibly interesting. And I think what you're doing there is just genius, and it's just amazing. I mean, Joanne, do you have any questions for Paul?
Oh wow, yeah, sure. That's really exciting, really. Yeah, so what are your plans for Tapestry X, and like, where are you now?
Oh, it's good. Yeah, I just gave you sort of hint of that. We're hopefully we're primarily positioning ourselves as we're a layer, what would they call a layer one protocol, and what does that mean? Well, for you're usually providing some service or processing engine. So there's an application, but it needs to have a recorded on a distributed ledger. So Bitcoin, Ethereum, Hyperledger, those are the layer one protocols. They then record actions from applications. So our goal is to be the layer one protocol and license our software to the nodes in a network. We're primarily geared to the private permission blockchains because we recognize we're operating in regulated situations and use cases. And so our plans are, we recognize the financial services is obviously a lot of our expertise comes from there, but there's usually, they take some time to accept, get approvals. If you're doing anything, and we're all used to, I've lived and worked in the UK. I'm in America now, in the US, but I've lived and worked in Singapore, Australia. I've traveled through Asia and Latin America. So you cover the globe. Each time you go somewhere different, there's different jurisdictions, there's different practices. So the financial services, although it can be lucrative, can also be a little bit of a mountain to climb to get through and approvals. The interesting thing I was saying about getting something like other use cases is the supply chain area. We think we've got an opportunity, we've got interest, and there's lesser regulations, and there's more likelihood that we'll move quicker on those use cases. So we're hoping that's a quicker entry point. The other benefit, though, what we bring is interesting enough, is that any supply chain usually involves a financial transaction at some point, and it's usually the supply chains. You forget, people give their goods out and they don't get paid for months. So the idea that we can speed up the supply chain and also speed up the payments. So us overlaying payments on a supply chain solution is what we do. We know how to do that, and we know you know, we can have relationships with the banks or brokers to help them partner with that. In the energy sector, you know, and there's a lot of talk about, you know, gas pipelines and all this other stuff. Goods don't move through those pipelines, and they're actually traded. They're bought and sold before they're moved. So there is a huge financial set of transactions that go on, anything to do with, you know, liquids or goods being transported, and commodities, you know, perishable or otherwise, that are traded before they're actually moved through the supply chain. So we actually bring that capability, which is interesting. So those are, you know, the supply chain seems to be our first thing, and you know, financial services is going to run in parallel, but we think may take a little longer. With interestingly enough, I do a lot of work with the Government Blockchain Association, which is a not-for-profit group in the US, and they're, I mean, the founder, Gerard Daché, I met him in New York 3 or 4 years ago, and he came, I want to make access to government easier because they're notoriously difficult to deal with, and they're notoriously slow at adopting technology. So I thought, okay, I can get behind this guy, and that's you know, led to me doing a lot of work with their association and working groups. And actually, one of the things we're working on, or we've just published, is a blockchain maturity model. So think about it. You're a vendor, you want to be able to promote your solution, where you can use the blockchain maturity model to say where you, and it's not a pass fail, it's more or less where do you, how do you fit to certain use cases or implementations. And from a buyer's perspective, it's like, how do I assess all these solutions, or what's the best solution for me? So what these do. Well, one of the guys who's actively involved in the GBA from Gerald's perspective is a guy called Scott Stornetta. And this is an interesting perspective because this is technology and business being linked. Most people don't know that although Bitcoin made blockchain famous from the paper in the end of 2008, and Bitcoin was launched in 2009, its origins really go back to 1982 with David Chaum, was a data scientist in the, and he laid out a paper of distrusted parties. And think about how early, I'm wearing a Commodore 64, you know, t-shirt, because that's what I was using in high school in 1982 to do like Space Invader programs or something. But for him to have thought of that process when computer was really at its early days was crazy. Well, fast forward 1991, 92, Scott Stornetta and Stuart Haber actually create the first blockchain. And interesting enough, they recognize that, well, how do you know what people have done? Because you need to check what they've done on the distributed ledger, and then you need checkers needing checkers. So it kind of like, well, how do you make this work? And his realization was, as you had more checkers, you actually reach a consensus, and that's part of, you know, that origin of that concept. It was Bitcoin, and well, we guess it's Craig S. right now, but Satoshi Nakamoto, who actually then created proof of work to create a means of creating validation or consensus across the network. But Scott Stornetta was involved with the GBA, and I was lucky enough to meet him, and we've got to know each other. He was the one that recommended a book to me, which is called Crossing the Chasm. And the problem with a lot of startups is that when you've got a new technology, if you have that initial success, it's with the early adopters. And so you create the illusion of, hey, we've solved this, we've solved that, we're getting there. And of course, everyone draws a straight line or even a straight line that goes up to say, this is our sales forecast. The problem is you hit the chasm because the next group of people you're selling to are the early majority, right? So it's good that they usually adopt technology early, but they only like to do it if one of their kind has done it already, which is a chicken and egg situation. So I'm giving you this as, you know, as I, you know, that's why I like to share my knowledge and help people in the industry, or certainly people who are younger than me who are trying this for the first time. But Scott was gracious enough to give us this book and said, this is what you're going to hit when you'll have some initial success, and you want to be prepared for this. And there's a whole strategy in the book about how you can make a beachhead, and that's really what we're trying to do with supply chain and and our financial. Technically, we're only supposed to have one, but we couldn't forget the financial services. So so we're cheating a little bit. But I'd say these things are open to interpretation. But it's interesting that you go to the guy that really created the first blockchain, and he's telling you business advice, not technology advice. But that was a an interesting and we're still in touch.
Yeah, I absolutely love that. And, those insights, I know will really beneficial to a lot of our audience that are watching this back. And it's just fascinating, isn't it, when you look at the history of it? And, because I don't think it's widely known about Scott, is it, back in the early days? It's not something I think that's probably widely known with general public or whatever. And, as we said, it's so interesting that you had that kind of business advice conversation. I think I need to get that book as well, because it sounds amazing. I think I'm definitely going to be looking for that book.
I thought I might have it around. I was showing it. Oh, here it is. Actually, this wasn't rehearsed. This wasn't rehearsed. There it is. And there's the gap. There's the gap. It's like, what it was? I got this. I was on the call with somebody else, and I had to reach for it over there, but I put it back over here. So I just remembered that. So it's funny.
Fabulous. Yes, I think, and I definitely need to get that book myself and have a look at that, because it sounds like it's going to be so useful. Really does.
I would say that's the thing I've found. It's interesting when you become, and when I consulted independently for a while. There's a lot of collaboration in the independent business peoples, because many of the people that are around you that look like you are normally not competitors. They're either in a different field or they're providing a different type of service. So it's interesting, things like outlets like this with SheFan Pro and everything else is, you've got the opportunity to just share your experiences, because, in some ways we're operating in either on our own or in very small groups, and you don't get the opportunity to have an outside perspective, which is why, I enjoy the, even though it was online for much of the pandemic, webinars or events, because you could just share your thoughts with other people and see the other perspectives. And although I've been diplomatically referred to as a constructive critic of some of the blockchain protocols, because I'm usually saying it's not why they're wrong, it's just you've got to understand their limitations. But again, you're trying to share the information, because a lot of people are excited about the potential, but they want to the recent meltdown in DeFi. I was at another event with the GBA in DC, speaking to their DC chapter. And regardless of what information we were sharing, the general feedback from the questions was people are yearning for information, education, and understanding. Because it's all great when everyone's making money, but when it all collapses and then there's people left with big positions, outstanding. It's like people want to understand, well, what went wrong? How did it do it? And that's part of coming from the financial services. There's a process engineering, but there's a risk management, there's a credit management aspect to it. And although believe me, I'm the biggest critic of all the infrastructure in the financial services. It's like, it's old, it's creaking, it's inefficient. We've had real-time, everyone watches the movies and sees real-time trading. Everything else happens 2 days, 3 days later. Why is that the case? Why don't we have real-time settlement? And it's just so hard to move all this infrastructure because it's siloed and it's product specific, and all the institutions have custom technology talking to these central authorities. So to get them to all move in real time, you have to get all these big elephants to dance together at the same time. It took them a few years to go from T+5 to T+3 to T+3 to T+2. That means trade date. Like if you traded it today, you used to settle 5 days later, then it was 3 days, now it's 2. They're talking about T+1 in 2024. When I started, they were all different. You know, it was every country had a different settlement practice, and you had to work with it. It was crazy, but they uniformed it and everything else. But it takes decades just to get, you know, a few days improvement and consistency. So that's the opportunity is technology, and I think there's going to be we're all operating real time on our phones or our computers, but a lot of this money and financing thing is happening days later in the background, which either means someone's earning interest on money that's just sitting around, or someone's not getting paid as soon as they could. So the idea that you can transact in real time is, it's going to be, and with improved risk management, it's going to be incredible.
Yeah, absolutely incredible. And I think, we're at a really poignant, significant time, aren't we, in our lifetimes? And I feel very lucky to be part of, something that's, going to go down in history, isn't it? Because, things are changing. There's a lot of learning to be done, an awful lot of learning to be done. I mean, every single day, there's something else that I need to know. And it's difficult sometimes to keep up because there's just so much to learn, and it's such a fast moving space, with lots of, pitfalls and all sorts of things along the way. But, nonetheless, it's fascinating. And I find the whole process quite empowering, actually. And this is why it's so important for SheFan Pro to facilitate, these events with our guest speakers such as yourself, because I think it's really important, people, the wider audience, want to hear, what's going on, and want to learn about it. And it's just fascinating, isn't it? It's fascinating. And in some ways it can be terrifying as well. I mean, I know when I first started my journey in, blockchain and cryptocurrencies and what have you, about, 7 years ago. And this is me, that's not from a tech background at all. I couldn't copy and paste back then, for goodness sake. It was terrifying. Even some of the simplest of questions were terrifying to me, because I didn't dare ask them for fear of it's a stupid question or whatever. What's the difference between a hard wallet and a soft wallet, for example, or something like that. And this was conversation that was getting loosely thrown around in communities that I was hanging out in, and yet suddenly you feel a little bit afraid to put your hand up and say, what does that actually mean? Just come back a minute. What does that mean? And so, for all intents and purposes, it can be terrifying to many people because it can be just so overwhelming and daunting. But, these events where we have guest speakers such as yourself that can bring all these valuable insights and everything and raise awareness, it's so meaningful, because, it's through these kind of conversations that we learn, don't we? And then the fear reduces. No,
that's true. Again, there's an analogy to the internet, in the sense that, and we like to say this for one of our taglines, but what did the internet protocol really do? It made communication consistent. Before, you had to go through a telephone exchange, whether it was your telephone, your fax machine, or other things, and you went through a central authority, and people couldn't imagine, well, if I could reach anybody I wanted to directly, I would have to have a many-to-many relationship. I'd have to have a bat phone for everyone I talk to. Otherwise, how do I connect to them? So no one could understand the sort of network of networks, sharing of information that the TCP/IP, the Network Internet Protocol, did. So that allows you to sort of say, like, I didn't have to go through an exchange. I went through a hosting service, but all I had to do was click on your Zoom link, and here I am with you. Yeah. So the internet protocol is communication. What blockchain technology is going to be is transactions. Now imagine you can transact with anybody as easily as you communicate through the internet. So therefore, if there's a standard protocol and you've got a network of networks to move assets between them or transfer positions, and again, when we talk about assets, it could be records, it could be real assets with their digital tokens, or it could be a digital record. So all these things, excuse me, are going to be able to move easier. And although it can be intimidating, none of us really, who understand, well, there's a few people I know, but understand how the internet works. So blockchain is not the thing I would focus on. It's like the internet, yeah, people made money by being able to use HTML and do websites and early Java stuff. But the real money or the real opportunities is how do you use this communications things? And I'm for one, when I heard about social media, I was like, okay, I get it. People want to talk to each other, but what's the business model? I didn't know about data and all the other things. Now, think about if you can have this universal transacting, network of networks. How are the doors going to open up? And I have to be careful because some of our clients could be the big banks and brokers, but I usually say to them, look, you're safe for now because we're creating this solution in a regulated environment that you obviously operate in today, so you know and understand it. However, the likes of a Walmart, a Facebook, a Verizon, a Google, they already have limited purpose banking licenses because they do some transactions themselves. They only need to expand those, add a brokerage license, and they can walk in with this ready-made infrastructure to provide a wholly different transacting network. And so in the same way, think about it, telephone, and I always say this actually, if you went to a telephone company in the mid-90s, maybe 96, 97, 98, and said, in 25 years, your main competition is going to be that DVD delivery service and that nascent online bookseller called Amazon. The telephone companies would have gone, how? What are you talking about? But when you think about it, when the communication became commoditized, content became king. And think about it, Amazon went from selling books to selling everything to content, and Netflix went from, physical deliveries to streaming, and it's content. And really the cable companies, the telephone companies, bringing cable companies, internet companies, and it's all about content. So the industry changed, the verticals changed, and it's just that these different companies came to the different world from different directions. Now imagine you've got transactions, are uniform. It's like the transactions are not the issue. It's what is you're doing above with all the transactions. So if you don't have to go through expensive banking infrastructure to manage transactions, if you don't have to have sophisticated securities infrastructure to do investments, and or anything to transfer data or records or even voting and things like that, this is the applications to use this technology is where the future is going to be. And that's, we're hoping to facilitate that, and maybe just to build on further plans, we may go into joint ventures or partnerships in certain verticals, but it's just like, you couldn't imagine the world of the 20 years post-internet, before it. Well, post-distributed ledgers really taking off. What's it going to look like in 20 years' time? Your guess is as good as mine, and there might be someone smart out there who's going to do something spectacular. We'll see.
Yeah. Oh, I love it. And I'm, as I said earlier, I do feel so blessed and lucky to be part of this change, this shift, this whatever you want to call it. I'm just glad I'm here and learning. And while I don't profess to be an expert, I am an ongoing learner, and and I could let's just listen to you all day. Honestly, I really could.
Yeah, I could. Wow, so interesting. Yeah.
I'm accidental entrepreneur at the tail end of my career, and I'm like, okay, but it's exciting stuff. It's like I said, there's a lot of things that align to make it easier for me to understand. And also, I count myself lucky, similar to you, Shelley. I got involved 6 or 7 years ago when it was still in its rudimentary state. So keeping up with all the developments, has just been a bit of a, putting a piece of the puzzle together as we go. But I do feel sorry for, I wouldn't want to be joining the party now because there's a lot of distracting information, and the crypto, the DeFi, the NFT, the metaverse, these are all new concepts that have all come out over the 6-7 years. And they're in their own sort of special space, separate from what would be the regulated distributed ledgers. But they're breaking down the barriers, showing how things can work differently, even if they are stumbling as they go. You know, and I'm not in favor of people losing money, but you have to be buyer beware with some of these protocols. But at the same time, they've shown the world how this technology can be worked, even if they're a bit resistant to move to the regulated world, and the regulated guys are looking jealously over the fence and saying, how do we do this kind of stuff? And that's actually, you know, one of our goals is to be the bridge. You know, if you've got the more, you know, advanced thinking TradFi guys, and you've got the open-minded, pragmatic DeFi guys, and we're sort of talking to both sides of that, there's a real opportunity to connect those worlds and make it work. But and again, that's why you know, usually people send me a headline like, what does this mean, or how is this different, or what it is, because it's like I said, I've had a 7-year you know, open university course here, you know, where I've just learned as you go. Whereas to try and catch up with it now, it's pretty tough. So you have to find your sources, and this is a great forum to do that, I'm sure.
Thank you so much. So, Paul, before we let you go, because I know you're busy, how do people, you know, if they're, you know, say some of our audience have further questions, or, you know, they want to, you know, have a chat with you, a consultation, whatever, to find out if there's, you know, some, you know, synergies, whatever, or, you know, maybe somebody's looking at some partnership work or whatever it is.
Yeah.
How do they do that? What do they need to do? Where are you?
Well, I'm obviously on LinkedIn. So Paul F Dowding, my middle initial, usually sorts out my namesakes around the world. So you can reach me on LinkedIn. The only thing I ask is that there's several marketers that say, hey, I came across your profile and I think you're a really good person to link to. And I'm like, well, really? Why? You know, like, give me something to say what's your interest so I can respond to you. That's the easiest way. On my below, tapestryx.com is the website. You can learn about our protocol. There's also, I've got downloadable documents. There's videos to be seen there. I also, company has a YouTube channel. So it's called The Blockhead's Thoughts Distributed. So I'm guessing I'm channeling my inner Yoda there, but it's The Blockhead's Thoughts Distributed. And I've got a series of videos, and the best thing is to go to the playlists link, because that has the videos. If you want to see about Tapestry X, they're one thing. If you want to see my panel discussions or other speeches, hopefully this one will be there posted one day. They're there in a group. And then I've got a series on some of the things I talk about, the limitations. I've got some more recent videos on supply chain, CBDCs, you know, what do you need to do in the capital markets? So all those are outlets that you can find. If you have a specific use case, then, you know, please come, and I can, you know, I'm happy to take those inquiries. You know, again, if people watch the videos and they have any questions, then, you know, they can reach out to me and find. If you're genuinely, you know, I'm happy to give, you know, a few complimentary, you know, time and energy to people, because I want to encourage the participation in the innovation. If it looks more serious than that, then we can talk about, you know, we're focused on use cases and our solutions, but I'm happy to consider some advisory stuff as well. It's, I know it's we've done it, but normally in working with people, you know, as I've done with you, Shelley, it's like, you know, we could have a few discussions. I'm not looking to, you know, build my time to people who are trying to, you know, change the world or make something different and just need to start, you know. And I've mentored a couple of local entrepreneurs here where I live, you know, just again, you know, I'd rather encourage the innovation than just sort of, you know, I'm not looking to that as a business model.
Yeah, no, that's brilliant. And, you know, I can personally vouch, you know, you're always very, very helpful and very supportive. And, you know, I just enjoy chatting to you full stop, really. You know, and I consider myself very lucky to have met you and to also have you now as a valued partner with SheFan Pro, you know, and equally, if any of our audience, you know, have any questions and you're having difficulty finding Paul for whatever reason, you know, come and chat with myself or Joanne as well, and we'll try and help you or make that introduction, whatever. We're always here to help and connect people, you know, in a meaningful way, and support really, you know, growth and development and you know, innovation really.
Yeah. And I also, I mean, like I said, I'm originally from the UK, but you know, now live in America. But our opportunities are, you know, global in reach, and you know, so again, if people are in the UK looking to break into the States, or you know, or they want a perspective, and you know, and obviously I've worked in global finance, so if there's anybody in the UK working in finance, you know, I do have some recollections of working in London, but you know, a little bit a while ago. But you know, with international finance, they've, you know, we have to keep up with all the developments wherever they are. So
yeah, no, that's absolutely brilliant. And you know, Paul, just to say a huge thank you for your time today. You're incredibly valuable insights, and you know, I'm looking forward to the future and you know, having more occasions like this and doing some more work with you as well in the future. You know, it's an honor and a privilege.
well, no, thank you for your time, and thank you for your work with SheFan Pro. It's an amazing idea and concept, and it's going to, you know, bear a lot of fruit, I'm sure. So I'm happy to help in any way I can. This is great.
Thank you. Thank you ever so much.
No, thank you for the question.
Thank you for your time.
You know, you made it easy for me. You know, I love to chat, so it's.
We've had a great time. We've all had a great time, and our audience, thank you for watching and taking the time out to watch this recording back. I hope you've enjoyed it as much as we have, and I'm very much looking forward to seeing you at the next one. Thank you so much, everybody.
Thanks.
Thank you. Take care. Bye. Bye, everyone.